Well, good day, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening. As we're here now on Wednesday, the 6th of September, 2023, markets are getting adjusted to what is going on, where it's, 5:40 p.m. in the afternoon right now. You're getting some follow-through in the stock indices. Metal's still under pressure. Copper market, just hanging in there. Now the dollar closed up another 5 points. It's not a runaway. I was just asked, I did a business interview just now with Aussie Business TV, and they were asking me what's the cure for the dollar. I said a high dollar. They go, what? I said, yeah, that's the cure. I said, what the high dollar does is other countries have to decide what do they do. How do they get their economy looking as good as we do? You're starting to see that the Bank of England is already talking. Maybe they're getting close to the point where they can stop raising rates. The debate is going on in Europe. Do they stop raising rates? So the U.S., I think that our Fed doesn't have to do diddly if they don't want to. Why? Big question. Think about it. Why? The market's doing it for them. The market just keeps taking it right here in raising interest rates. Who's doing that? In part, our Treasury Department. Have you noticed that every day there's billions of dollars being put out in debt every single day, and they're getting higher and higher rates? Today, a 17-week auction got like 5.37, nearly 5.4. So for 4 months, 1 week, they're going to give you 5.4% risk-free. And you think that's a bad deal? That's sucking it up out of the market. In other words, a vacuum, taking the money there. And people go, well, why should I buy stocks right now? What's the weakest month of the year traditionally in the stock market? History doesn't mean it has to be. It's what it's been. Past performance does not guarantee anything. But traditionally, it's now. And I'm of the opinion that rally we had at the end of August that wiped out a lot of the August losses that were early on in the month was the kiss of death for the stock market. Now it's easier to come back and retrace a lot of that. That's just my own guess. So where do we go in the metals? Well, as long as the dollar stays this strong, why do you want to own them? That's the first question. Gold's headwind is you can make 5.4% roughly in a short period of time by just putting your money into the bank. Not so rough. Number two, the dollar keeps getting stronger. That takes away buying power in gold worldwide. Why? How's gold priced worldwide? US dollars. So they can do all the currency conversions they want. It's getting more expensive. So people back away from it. Yes, it's worth more in their currency possibly, but in the dollar, it's the opposite. So you've got that funny part going there, and they go, maybe I back away because the dollar is the damaging factor. When you look at the gold, one of the things we had talked about is we had come down off this bottom and up, and I said it over and over. Are we just going to kiss this and turn back down? Well, so far that's the case. You are down 1.26%. So we'll see how the week ends up. It's only midweek. We're into Thursday trade already. You got another day or two to go. When we look at the chart, as the market had fallen here, I prepped you and said, look for a bounce. It could be a third, 50%, and then we'll see if the market wants to continue on a trend. It's not trending right here to the downside, not. And you'll say, what's he talking about? Look at what it's done. Well, a couple of things. First, right over here, I'll take you there. You had an outside day. And the outside day was an outside day up. Notice how you closed higher, you took out the prior day's high and low, and then you let go from the downside. This is all so important. I teach this in my course, that when you get that, it's often a sign when you take out the low of that day, it's a failure. And what the market does is suddenly traders that have been riding go, uh-oh, am I caught in this trade? This is the psychology, and you start backing off. We have not broken the prior lows, so the pattern is still one of higher high, higher low, but it's perpetuated because of that, in my opinion at least, a move, and that move down should have been to the 18-day average of closes. And if you took the course and you went through the chapters, you tell me that didn't happen. It's exactly what happened, so congratulations on your purchase. Where did the market stop on the rally? the first challenge of a number it hasn't been at in a while, the 200-day average. And when you look at the Bollinger Bands, that was right with it. That's a big combination. And whenever you get up there or down to a Bollinger Band, here's all I hear from people. Oh, it's going to break through this time. It's going to keep going. You're going to be left in the dust. Of course I am. I'm always dusty, but I'm old. All right? That's what happens when you get older. You get dusty. But no, I'll stay with the percentages that the algorithm is built so that 95% of the time the market will stay within it. I'll give up that other 5%. But the combination of hitting a major moving average you haven't hit in a while, that adds to that, and it probably takes that percentage, in my opinion, down even further. Does that mean we're in a downtrend yet? No, you're neutral in terms of pulling back to the 18-day average. Now, for the moment, the market is trading underneath that 18-day average, so the bias is down momentarily. The trend is up on the swing line. The key is, do you take this out? If you do, you're still not in a downtrend. It's a vertical price break. You would have broken the pattern of bullishness, but you would open the door up if it wants to go down and look for support. The only number under it is the lower Bollinger Band. Does it have to get there? No. It can hang around here for a little bit and confuse traders. The gold-silver ratio completely changed on you. Look at how the market just picked up and ran. And you can see how the silver, because of that, loses to the gold and the numbers start falling back, and that's where you're at. Unlike gold, this isn't a bear trend. You have lower highs, you have lower lows, you got your first settlement under the 18-day average on Tuesday. Wednesday's close today was even lower. Now you're in the Thursday. Are you in oversold territory? Well, you're knocking on the door, but you're not there. Numbers have to get under 30. If this market wanted to go and just catch stops and wipe things out, could it drop from here 23.35 to 22.41? Yes. But that's an awful lot to ask, a dollar break from right here without any real news behind it. So be a little wary of it. That would be what I'd be saying. In the copper, I don't see a trend at all. I see a market that rallied into the 100-day average, the upper Bollinger Band, in an overbought condition and ran into a brick wall. It pulled back to what? The line in the sand. Get used to that word, line in the sand, a neutral point on a chart. Chartists like neutral points. That's where a market might go to figure out the next move. I believe the 18-day average services that so well that it's a mainstay of what I teach in my charting courses. In the platinum, once you lost the embedded reading, and you did that right over here, it opened the door for the market to go back to the closest main moving average. And it's going to be right here. Watch. That's it. I'm looking for the 18-day average to come in. Follow it. Tell me that's not exactly what occurred. That's where you're at. So be careful here. This market is screaming at you that is what's going on. In the dollar index, higher lows, higher highs. And as you can see, the market overbought. Would I ever tell a client to buy an overbought market first? No. Second thing, would I tell a client to buy a Bollinger Band? No. Is the trend up? Absolutely. The way I teach charting, would I be telling clients, take your money off the table? Yes. Could it go higher? Yes, doesn't matter. The high percentage trade is to take some money off the table. So that's what trading's about. Charting especially, doing the percentage trades, things that you've seen work, that continue to work for you, stepping into the high probability this is going to happen, that's going to happen. But remember, it's the word probability, not guarantee. You will have losers. The best laid chart action can still produce a loser. And you always trade expecting that. When I build models for myself as to what I want to do, and I'm building a model right now, I always say, I can't have it blow up where I wipe out my account. So I've got to trade smaller. I've got to do this. And if I like the pattern, it shouldn't vary. This is what you allocate to trades, blah, blah, blah. A lot of this is covered in all the different brochures that we have and that I helped put together over the years here. This doubles this list all the way down. It's free. Some of the courses I have, Pivot Points, the Arun Indicator course, they're free. The Futures Trading Kit with chart patterns galore, the patterns that the markets normally fall into, they're there. So how do you get all this? Go to our website, iraepstein.com. Top left, free offer. So move your cursor up here. Free offer. You'll see the icon. Give it a click, and I'll see you in the morning. Take care.